Well, it's 6:30. We are live on Zoom and YouTube, and looks like we are ready to start. John Carr, why don't you take us away?
Good evening, and thank you for joining us tonight. My name is John Carr. I'm a 20-year resident of Flagstaff. Like many of you, my home is impacted by the post-burn fire conditions. I serve as a community development engineering supervisor, and I'll serve as moderators for tonight's meeting. The format of this presentation is not set up to address questions. However, please email us any comments, questions, or concerns to the email address provided at the end of the presentation. We'll briefly just go through, preview the agenda. We're going to talk about flood risk, wildfire maps, steps at reducing your flood risk, discussions by Edie Lohman and Bruce Bender regarding flood insurance. But before we start that, we're going to take a couple moments to get some messages out from Coconino County and the city of Flagstaff. We'll start with Lucinda Adriani. She's the Coconino County Deputy County Manager and the Coconino County Flood Control District Administrator. Welcome, Lucinda.
Thank you, John. As John indicated, I'm Lucinda Adriani. I serve as the Flood Control District Administrator, and probably many of you already know that I've been involved in every post-wildfire response and mitigation effort since beginning with Schultz back in 2010. Through numerous other efforts that we've had to confront. And first and foremost, I want to say that, my focus right now is to be looking at what can we do to relieve your suffering. And I know that many of you, if not all of you, are probably suffering the consequences of the post-wildfire conditions that we're now experiencing once again. Many of you experienced that through Schultz and now are experiencing it again. And the severe and repetitive flash flooding that we're seeing is just horrific. And, again, we are working very diligently to try to effectuate a long-term mitigation plan that will reduce that suffering and those impacts. So, as I've been saying, hang in there with us. Tonight, though, we're here to talk about flood insurance, and we're very fortunate to have two experts. We have our FEMA, the Federal Emergency Management Agency's regional national flood insurance program expert, Edie Lohman, with us. And some of you that were involved in Schultz may remember Edie came and did a presentation at that time as well. And we also have Bruce Bender. Bruce Bender is a consultant, does an extensive amount of work with FEMA and with communities, largely looking at remapping efforts when they remap FEMA floodplains. And he's worked with us on a remapping effort that has been completed now in the Coconino Mountain Air area. He's working with us on an effort to do that, which has now been going on, I think, about 7 years in the Buns Park area. He has tremendous amount of knowledge in this arena. So we have two very capable experts with us tonight, and really appreciate them taking the time and contributing their knowledge. There's been a lot of changes to the National Flood Insurance Program over the last couple of years. And by no means, no one here locally is an expert. These people have the expertise, and that's why we asked them to come and join us this evening, and really, really appreciate them taking the time. To that end, as we kick it off here, and then I'll turn it back over to John. One of the key questions that frankly, the question I hear relative to insurance out in the flood areas is, and this is a question specific for Edie, and I'm hopeful that she'll be able to answer this during her presentation, is is, has FEMA made the determination yet regarding the waiting period? I think as many people are aware, the district worked with Senator McCain after the Schultz fire and flooding. And he introduced legislation, which then was passed by Congress, that allows FEMA to waive the 30-day waiting period if the flooding emanates from a national forest. Certainly no question been documented by the U.S. Forest Service that this pipeline fire did originate on forest. And but this is a decision that FEMA needs to make. Neither the city nor the district have any involvement in that decision. That's purely a FEMA decision. But I know many people did go out and buy insurance as the fire was underway, or shortly, as we began to discuss with the communities the risk of post-wildfire flooding, which was pretty immediate, and people began to purchase insurance. But certainly we had flooding so quickly. We had a very early monsoon this season, so there were impacts into many parts of the flood area, particularly Wupaki trails. As early as, I think the earliest flood was June 26th. It's the earliest since I've lived in Flagstaff, 25 years. So that's a key question that I know many of you have been asking. And then people have been asking about insurance, the rates for some of the insurance. And I've learned a fair amount from Edie and Bruce about that since then. And they're going to spend quite a bit of time talking about why rates have gone up. I'm not hearing that as much in the area east, north of town, and the old Schultz flood area, I'll say, but certainly hearing that from people within the Flagstaff area, the Rio de Flag and the Schultz Creek area. So I prefaced this. I told them I would be asking these questions because these are two of frankly, these are the two questions I've been getting. Haven't been getting a lot of other questions, to be honest, but getting those questions. So I've asked to try to address those tonight. So with that, I'll turn it back over to John. Thank you, John, and I appreciate you organizing this effort.
Thank you, Lucinda. Next, we have Ed Shank with the City of Flagstaff. He's the Stormwater Manager. Thank you for joining us tonight, Ed.
Oh, thank you, John. Thank you, Lucinda. I'm just going to keep it very brief. As John mentioned, my name is Ed Shank. I am the Stormwater Manager here within the city. So if you have questions within the city is the FEMA administrator for, city stormwater section is the city administrator, whereas the county is the FEMA administrator for the unincorporated areas. As Lucinda mentioned, we have two experts here today, and I'm going to defer most everything to them. But on the backside, the stormwater section is here to help support through the community rating system, which will be talked about briefly. And with that, I'll kick it back to John.
Thank you, Ed. Next slide, please. And this slide here talks a little bit about the Schultz area, the Pipeline West area, and the museum fire and flood areas. Also, the City of Flagstaff has a couple links there. These are really good sources to find out information about flood insurance, sandbag locations, flood mitigation exhibits, and you can also sign up to receive emergency notification and get real-time stream data, gauge data. That's been really useful for me because as I said, I live in an impacted area, and it's good to get those notices in a text message that comes in really handy. Also here on this page, we have the FEMA Map Service Center. Well, we're going to be talking a little bit now about how the special flood hazard areas impact insurance and how they don't, a little bit later with Edie's discussion. But this link will show you the latest FEMA special flood hazard areas. Next slide, please. So leading off our discussion tonight is Edie Lohman, who will discuss flood insurance with the Nfip. Edie serves as the National Flood Insurance Program Specialist for Region 9. Thanks for joining us tonight, Edie.
Thank you so much, John, and good evening, everyone. As John stated, my name's Edie Lohman, and I'm the National Flood Insurance Program Insurance Specialist for FEMA Region 9 out of California. That's where our office is based. It's a pleasure to be here this evening and to provide some general background information about the National Flood Insurance Program and a little bit about how the National Flood Insurance Program works. So with that, let's go to jump into our discussion. So the National Flood Insurance Program, which we refer to as the NFIP, that's what it stands for, National Flood Insurance Program, is a large federal government program that was introduced by Congress back in 1968 to enable property owners and renters to really protect themselves against flooding at a time when most private insurance carriers were not offering flood insurance coverage because historically and to this day, we know that flooding kills the most people. It causes the most property damage nationwide. So it comes on quickly in a lot of cases, and it's very, very catastrophic. And that's why a lot of insurers really do not want to insure for flood. But we do have the National Flood Insurance Program, and in a few minutes, Bruce Bender is going to talk a little bit about some new prospects on the private market that's available for flood insurance. But for now, let's talk about the National Flood Insurance Program, which is really driven by federal legislation that is offered by Congress. The Federal Emergency Management Agency, or FEMA, has been appointed as the federal agency that oversees the day-to-day operation of the program. But ultimately, the program is really embedded in federal legislation and the Code of Federal Regulations, and that's pretty much how it operates, with the primary goal being the preservation of lives and property. Next slide. So how does the NFIP work? FEMA agrees to make flood insurance available to communities when the community agrees to adopt and enforce minimum floodplain management regulations. And floodplain management regulations are standards designed to keep people safe and out of harm's way by requiring communities who participate in the program to adhere to a minimum set of building standards. It's voluntary for communities to participate in the National Flood Insurance Program, but in exchange for participating in the program, property owners and renters in a participating community are eligible to purchase flood insurance for their building and/or their contents coverage through the National Flood Insurance Program policy. And that also means there's a second piece to this, so they can purchase flood insurance coverage, but it also means that property owners and renters, because their community participates in the National Flood Insurance Program, are also eligible for applying for federal disaster assistance in a federally declared disaster. So the NFIP provides flood insurance to anyone who wants it, as long as the community is participating in the program. So this means that everyone who wants an NFIP policy can purchase one, and the National Flood Insurance Program doesn't deny coverage. Next slide. So for communities who do more than the minimum to participate in the National Flood Insurance Program, they can participate in a program that we call the Community Rating System, or CRS. And essentially, CRS is an incentive program which offers annual premium discounts to property owners and renters who purchase NFIP flood insurance. The discounts vary depending on the level of participation by the individual community, which is dependent on the availability of community resources to really remain in good standing in the CRS program. The CRS program takes a lot of work and a lot of effort. So a big shout out to Coconino County and the city of Flagstaff for their participation in the NFIP's community rating system. This not only keeps people safer by them participating in the program, but it also keeps more money in the community. In unincorporated Coconino County, that means that an average annual premium savings of $52 per policy, or $16,893 is saved community-wide. And for the city of Flagstaff, that means an average annual premium savings of almost $139 per policy, or a total of $85,512 community-wide. So that's quite a success. And again, shout out to Coconino County and the city of Flagstaff for their participation in going above and beyond the minimum standards. Let's go to the next slide. What does the policy cover? So on the left side of the slide, you can see that when you think of flood, this is probably what you envision, is a general and temporary condition of flooding, which is really defined in our policy as a general and temporary condition of partial or complete inundation of 2 or more acres of normally dry land area, of which one of those properties is your property. And then on the right-hand side, you're going to see a picture of a mud flow, which, if it is defined as a river of liquid and flowing mud on the surfaces of normally dry land area, then it is considered a mud flow, which would be also covered as part of our flooding definition under the NFIP policy. So what we don't cover with respect to mud flow, which is often confused, is we do cover the mud flow, but we don't cover other types of earth movement. For example, landslide, slope failure, saturated soil mass, that kind of thing would not be covered under an NFIP policy. So people ask a lot, well, then how do I figure out whether it's a mud flow or a landslide or slope failure, or what is it, and whether I'm not I'd have coverage for that? So we have experts who come out and determine what type of land movement it was, whether it's a mud flow or something else that caused the damages. That's part of the claims process. But for our purposes here, I want you to think of a mud flow as like a milkshake. So if you try to shovel a mud flow, it will flow off of the end of your shovel, versus some other type of land movement where when you dig the shovel in, it's more of a sticky mess that sticks to the shovel and doesn't flow off. And so that's a good visual to use to when you're thinking about mud flow and whether or not that's covered under an NFIP policy. So what does the NFIP policy cover? Well, it covers most of your building items. So it covers everything inside the interior of the building, the foundation, the required utility connections, things that are permanently there in your building that you would not take with you if you moved. And that includes exterior items on the building as well. So generally you can summarize it as it covers the foundation, the framework of the building. It covers the machinery and equipment that services the building. What it doesn't cover is things on the exterior like landscaping, pools, that kind of thing. And also we have contents coverage that's available, which covers personal effects that you would take with you if you were moving from your property. Next slide. How much coverage is available under a National Flood Insurance Program policy? These are statutorily set maximums allowed by Congress. So for a residential building, you can purchase up to $250,000 of coverage on the building. For contents, up to $100,000 for a residential building. And for commercial buildings, up to $500,000 on the building and up to $500,000 on contents coverage. Okay, let's go to our next slide. When is the policy effective? So with few exceptions, we have a standard 30-day waiting period before an NFIP policy becomes effective. The few exceptions that we have, and basically there are three. The first exception is when the coverage is required by a lender in connection with a new federally backed loan in order to be compliant with the federal law, then the coverage is effective immediately. Or the second exception would be when there's a new FEMA flood map, then there's a 13-month window of opportunity where a National Flood Insurance Program policy can be purchased with only a 1-day waiting period. And the third exception to the 30-day waiting period is called the post-wildfire exception to the 30-day waiting period, which works like this. So when there has been flooding on federal land that was exacerbated by wildfire, and the property owner has purchased an NFIP policy before the wildfire or within 60 days after the official fire containment date, and then the property owner gets flooded during what would normally be their 30-day waiting period, then the property owner may be eligible for a 1-day waiting period in that case. NFIP determines the eligibility for the post-wildfire exception on a case-by-case basis during the normal adjustment process. So they're going to automatically investigate if there's been a wildfire in the area. The adjuster is going to know that. They're going to automatically investigate if the property owner is within their 30-day waiting period, whether or not that post-wildfire exception would apply. So the one thing that I do want to talk about a little bit is that the post-wildfire exception is embedded in a piece of federal federal legislation, excuse me, that was passed in 2012. And it's the eligibility criteria to waive the 30-day waiting period are very specific in the law. And FEMA does not have the latitude or authority to waive the provisions under the federal legislation as provided. So what we're doing is we're looking at these on a case-by-case basis for our policyholders who have flood insurance policies through the NFIP already, and they happen to be in their 30-day waiting period when there's an event that occurs on their property. So this is determined case by case at the time of loss. Okay, so next slide, please. So when is flood insurance mandatory by your lender? So under the federal law, flood insurance is required on any building that's being taken as collateral for a federally backed loan where the building is located in what we call a special flood hazard area or a high-risk area on FEMA's current flood insurance rate map. Now, special flood hazard areas or high-risk areas are really defined as any flood zone on FEMA's map that is designated with a letter, starts with the letter A as in Adam or V as in Victor, and you'll be able to identify these special flood hazard areas or these A and V zones by looking for the green. I call it a green. Some people say it looks bluish, but green or bluish area on FEMA's flood insurance rate map. And that is going to show or outline what the special flood hazard areas are. And you can go to the website that you see on this slide, and you can look at all the FEMA flood insurance rate maps. You can type in your address and it will populate the FEMA flood map that applies to your property based on your address. In addition to being used by lenders to determine when flood insurance is mandatory, the FEMA flood insurance rate maps also inform building construction for compliance with floodplain management regulations. And the FEMA flood maps they're a snapshot in time, and they're subject to a very lengthy and deliberate regulatory process that's embedded in the Code of Federal Regulations before they come effective. So before the flood insurance rate maps become effective, there is anywhere from a 2 to 5 year plus period that they are going through this regulatory process. And all that to say that means that they don't reflect immediate changes in ground conditions like wildfires, because we don't have that flexibility in our mapping process, because it is a regulatory process in the Code of Federal Regulations. Okay, let's go to the next slide. So where can you buy flood insurance? Any local insurance agent is where you can purchase a policy for flood insurance. And if you don't have an insurance agent who is familiar with writing FEMA flood insurance, and we do see some of that, or you just don't have an insurance agent, you can call the toll-free number that you see on the screen, and they can provide you with a list of insurance agents who are actively writing NFIP policies. And I should mention here too that insurance agents who are writing NFIP flood insurance policies are all using the same system and rating criteria to rate the policies. So theoretically, if you go to an insurance agent and you provide them with the same exact information, if you go to 10 different agents, you should get the same quote for your flood insurance through the NFIP. Everybody has to play by the same book, if you will. So the next question is probably, how much does it cost? So recently, FEMA implemented a new automated and modernized rating system called Risk Rating 2.0. And some of you may have heard or read about FEMA's new rating system. Our old system was built in the 70s. It was very inflexible and extremely limited in being able to price flood insurance. And we had not updated it since the early 70s. And Risk Rating 2.0 really leverages private industry best practices and advanced actuarial and data science to calculate the premiums. And the framework of the system is really built on multiple state-of-the-art catastrophic models that have the ability to identify a building's unique characteristics and rating factors. And as you can see on the slide, some of the key rating factors that are incorporated into the calculation of the premium under our newest rating system, really fall into three categories. Where is the structure built? So the insurance agent puts in the building address, and automatically it's calculating based on the address that's been put in there, the distance to the nearest flooding source or sources. Some homes are subject to more than one flooding source. What's the building's elevation relative to the ground that it's sitting on? We have automated ways of accurately capturing that information now. And then the second category, how is it built? So what type of construction is it? Is it concrete or wood frame? What type of foundation is the building on? Is it elevated on post pile piers? Is it slab on grade? Does it have a crawl space? Does it have a basement? How many floors does the building have? And how high is the first floor height above ground relative to the lowest adjacent grade on which the building sits? Where is the machinery and equipment that services the building? Where is that located? And then our third bucket is what's built. So what's the replacement cost value of the building? How much building and contents coverage are being requested? What are the building and content deductibles? Is there an NFIP flood loss history on the building? So those types of factors are all being calculated based on questions that the insurance agent will ask you when they're completing the application. And then based on the property's address, they're automatically being calculated in the background. So no two premiums are going to be alike because no two buildings are alike, but the agents are all using the same system. And so the new system no longer relies solely on the flood zones that are on FEMA's flood insurance rate maps, nor does it currently have the ability to take into account products like Coconino's post-wildfire flood after fire maps, which were thoughtfully designed for advisory purposes immediately following an event like a wildfire. While the new risk rating system is much more agile and modern than what we had in the past, it's not flexible enough to adapt to immediate events like wildfires. Next slide. So where can you get more information on the National Flood Insurance Program if you're just interested in learning more about the program or the policy coverages or finding an insurance agent? There are two ways that you can do that. You can go to floodsmart.gov, which is our outreach and education website. It's very easy to navigate, and I encourage all of you to go there. Or you can just simply call our NFIP Help Center at the which is the toll-free number that earlier on, where you can locate an insurance agent that's actively writing an NFIP policy. And John, I'm going to turn it. Thank you.
Thank you, Edie. Our next presenter is Bruce Bender, who will discuss private flood insurance. Bruce is a vice president of Bender Consulting Services. He provides outreach and community engagement flood insurance support. Welcome, Bruce.
Great, thanks. Just want to do a quick sound check. Can you hear me okay, John?
Yes.
Perfect, thank you. And thanks, Edie, again for giving an overview about the National Flood Insurance Program. Risk Rating 2.0, as you heard from Edie, really has taken it into the 21st century. As she mentioned, it used to talk rate just basically upon what's your flood zone, are you in or out? And then how high were you above the lowest floor elevation? Those are the two key things. Those two things no longer are being used as rating variables. And to her point that the wildfire maps that post-wildfire maps that the county and city are working with really are helping you inform what the very current flood risks are. And you should really pay attention to those, because the flood insurance rate maps that FEMA puts out, or the data that's being used in risk rating 2.0 and the new rating methodology, do not incorporate that. So I appreciate all that the county and city are doing to help you be aware of your flood risk. Let me add to that, to the Nfip, as Edie put at the beginning of her presentation, that there are other alternatives than the federal flood insurance. It's basically private flood insurance. And it sometimes gets confused because the federal flood insurance is actually written by a company, and I'm not promoting these companies, but I'll give you an example. You'll see Allstate, or you'll see Farmers on there, or Wright Insurance. Those are companies, insurance companies, that have raised their hand and said, hey, I'm going to sell the federal flood insurance program, and it's totally backed by the federal flood insurance, the feds, but it is being serviced by those carriers. So that way, when you write your homeowners with one of those companies, you might also be able to then easily write with that agent the flood insurance. However, there are times now that we have seen that the private flood insurance market has seen some growth. So the next few minutes, I'm going to kind of go over what those are. As I used to manage a flood insurance division of a company that wrote the flood insurance business for many years, and I did an analysis. And when I first looked at it, there was just a handful of companies writing private flood. As Edie pointed out, companies really weren't wanting to take on that flood risk. But as data and technology has improved, and we've gotten more information about people's flood risks in detail, we've seen now from a handful to over 50 different programs, not that 50 different agents, but 50 programs across the US, and several of those writing here in Arizona. Now, I want to make sure you understand that there are two types of programs. So when you talk to your agent, you can have, and I don't sell flood insurance, so don't be calling me for a policy or anything. So I'm not promoting any one agency or company, but just to inform you that there is a program, a group of insurance policies or companies that are known as admitted companies. They actually have to file their rates and their forms to the company, to the Department of Insurance, and be approved to write in the state. However, there are those that are called non-admitted, that's not bad, or surplus lines, where they don't go through that process. But if, for example, if they ever go belly up and they can't pay claims because they've had too many losses somewhere, whether in this state or elsewhere, they don't have access to the state's guarantee fund, which would help pay for those claims. So it's important to ask your agent about, is it admitted or not admitted? An example of a non-admitted program would be something written through Lloyd's, London. But what's really driven the private flood market is a lot of new technology, new ways to better understand what your flood risk is, using just like, Google type search or Google photography, those type of things, where they can actually go in and help identify what that flood risk is around your property. And that's kind of where risk rating 2.0 now has gone with FEMA. Also, the lenders now are much more comfortable because they finally passed some regulations, Congress did, and guidance has been provided by the lenders about how you can accept these private flood policies to make sure that their interests are covered as well as the mortgagee. But what we're finding is there's broader coverage. There is very limited coverage in certain areas, like a basement, for example, in the Nfip. However, as you'll hear me explain in a minute, you can actually get some broader coverage. So let's look into a little more detail about the type of policies you may come across. Long ago, when they were doing this, basically not having a lot of data, the private carriers would say, well, the NFIP's kind of got this figured out. Let's just copy what they have. So these are my terms, by the way, on this slide. They would do the NFIP Me Too. They would literally copy every word except for where it said NFIP or FEMA, and they'd put their company name in. And they'd follow the rates and maybe just give them a discount. But we also saw policies that were known as differences in condition. So if your homeowners didn't cover flood, if your homeowners didn't cover earthquake, volcano, sinkhole, et cetera, these differences in condition policies would cover those. And actually, there are a couple companies that write in Arizona this DIC policy, and they've been around for several decades. So they've been pretty well established. And so you may come across one of those as an alternative quote to the NFIP. We're seeing in some areas, I don't know if I've seen any here in Arizona, but that doesn't mean they're not here, is where you're actually taking your homeowner's policy and adding on flood insurance coverage. May not be to the full limit, maybe in a zone X, the low moderate risk areas, maybe 5, 10,000, whatever, but we are seeing some of those as well. And finally, it's taking the NFIP policy and making it a lot broader. And those are being accepted by the lender. So what do I mean by broader? Limits. As you saw Amy, so as you saw Amy point out, that the limits for the NFIP right now for residential are 250,000 in building and 100,000 in contents. We're seeing that a lot higher for a private flood, up to an average of up to 5 million, maybe contents 2.5, or that TIV is total insured value, means they're combining the building and the contents together, up to 15 to 20 million. So a lot higher coverage than the NFIP is offering. They're offering replacement costs. The NFIP policy, and because of time, Edie wasn't able to get into this, but the NFIP policy covers only in certain specific cases, the replacement cost value of a home. Otherwise, it's always actual cash value, the depreciated cost. Whereas when private flood, we're actually seeing it on buildings and on contents, whether it's your primary or a secondary home, for those who might have a secondary home up here in Coconino County. Cancellation. It's very difficult to cancel an NFIP policy. You can't just call up and say, I don't want it anymore. And the reason for that is FEMA was concerned that maybe these will be rainy day policies, and when you hit the dry season, they'll cancel. We're actually not seeing that on the private side. We're seeing people holding on to their policies from what I talk to private carriers, and not doing this canceling just for seasonal purposes. Waiting periods. You heard Edie say typically there's a 30-day waiting period. We're seeing a lot of private floods, 0 to 5, maybe 7 days. That will go 2 weeks. Waiting period, not the 30 days. So they're being more flexible on that aspect. Note that most of them, or the ones that I have seen or heard about, don't have this unique fire, post-wildfire 1-day waiting period that Edie described. They have their own set of waiting periods. So make sure to ask your agent if you do get a quote for that. And finally, a lot more coverages. We're seeing additional living expense. Right now, if you're homeowners, if your home catches on fire and you have to stay at a hotel, a lot of your homeowners will automatically cover a certain amount of daily expenses, if you will, up to a certain amount cap for additional living expense to live outside while the home is getting repaired. We've seen some basement coverages, which is limited with the NFIP. We've even seen swim pool clean out. We've seen an endorsement where the company says, here's $10,000. You use it as you want to help recover. So understand that the prices may be cheaper, plus they may also be giving better coverage or better benefits than the NFIP. However, let me leave you with this, and I'll turn it back to John here. Considerations that you need to talk to your agent about if you are offered a private flood policy. One, these private carriers have their own ways to rate the policy. You won't see the CRS credit in there probably. You won't see FEMA maps necessarily in there. They might put it on the declaration page so the lender knows if it's in a high-risk area or not, and lender requirements. But they come up with their own ways, and one company will rate this way and another company will rate that way. They'll have their own waiting periods, et cetera. So they do their own way. They may give you a quote, and then when they do some more deep digging in, they may find out, you're in that wildfire risk area. and they rescind that quote. They say, nope, we're taking that quote back. They have the right to do that. You may not like it, and we have an example of someone who actually has had that happen recently. They don't have to renew. The NFIP, as you heard from Edie, is they write all, and they will renew all. But if that carrier writing the private flood decides, we don't want that risk anymore, or we have too many policies in area, they can non-renew that policy. Something to keep in mind, if you had an NFIP policy, you then left the NFIP and went to the private, then they canceled and you couldn't get any more private, and you came back to the NFIP, that counts as a lapse, as it's called. And if you happen to be at a discounted rate initially, you will not get that discounted rate when you get back. You'll go to what's called a full risk rate. So keep that in mind. And when you do that, remember, the NFIP has a 30-day waiting period. So you're going to be at risk for those 30 days when you come back if you're not timing it carefully enough. And finally, surplus lines carriers, as I mentioned at the beginning, those excess flood, the Lloyds of the world and stuff, are not protected if the insurer goes solvent. In other words, those claims can't be paid through the state's guarantee fund. And finally, just make sure before you do it that your lender will accept that policy. Most are now doing that, but I hate for you to get the policy and then the lender goes, oh, we won't accept it. So went through a lot there, but we wanted to let you know, because we are hearing, the county is hearing of cases where people are getting these private floods and aren't quite sure what they are and what they mean compared to the federal flood insurance program. A lot of good carriers out there, a lot of good programs out there, and a lot of benefits to it. But just go in with your eyes a little wide open. And with that, John, I'll turn it back to you.
Thank you, Bruce. Let's go to the next slide, please. We have some really useful links here. One is with Coconino County. The top one there is the flood control district, and that gives a lot of information about what kind of follows below. The county, Coconino County FEMA floodplain remapping page also provides information on the latest Kachina Village and Oak Creek studies. There's a email address here if you want to contact the county, FEMA flood map at coconino.az.gov, and then a phone number there as well. And if you have questions about building permits, that number is also available. And the City of Flagstaff webpage, there's a really good source for flood insurance, including information about flood mitigation project. And then you'll see Ed Shank's contact information there. Next slide, please. And the NFIP also provides, there we go. Okay, provides insurance to property owners, renters, and businesses. That's what that first web link on the top talks about. The second one there is Risk Rating 2.0, and it talks about some of the methodology in determining how the new flood rating is worked out. And then several others down here. The main one on the bottom, I think, is really valuable. The floodsmart.gov cost flooding. It talks about, it's a link for an online tool to see how much flood damage, even just a few inches, can roughly cost you. For example, 1 inch of water can cost up to $25,000 in damage for your home. Next slide, please. Well, thank you, everybody, for attending. A copy of this presentation will be available at the webpage there. And Lucinda, I see you're on. Did you have anything else you wanted to talk about?
I just wanted to thank Edie and Bruce for contributing this important information, and just wanted to note for those that are in the Schultz pipeline flood areas, the county has a Schultz/pipeline flood area website, and if you're looking for information like the specific flood maps, you would go to that website, just to make that clear. And the FEMA floodplain maps do not include those, because certainly out in the Timberline, Donny Park area and so forth, we have no FEMA floodplains out there. And so just I wanted to make sure that was clear to people, and there are a lot of other resources there and information there that's available as well to those that are in the flood areas. And there's a link there to cities information and information about what we call Pipeline West, which is the Schultz Creek flood corridor, which comes into 180 and Coconino Estates area. So there's a lot of information. The city also has a lot of information as well. So, and thank you very much, Ed and John, for orchestrating this. Appreciate that. Thank you, John.
Thank you. And I guess if anybody else has any other comments, we'll just call it good evening to everybody. Thank you.
All right. Thank you.